Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a Thanksgiving week, folks. Kick back, have a good time. If you are driving, please be careful. Hope is a renewable option. If you run out of it at the end of the day, you'll get to start all over again in the morning. Barbara Kingsolver. Big time. Market-wise, let's take a look at it out here. We had the Dow finish down 31, NASDAQ off 2, S&P's down 550, gold contract down $8.30, trading at 1,068 an ounce. Silver down 5 pennies at $14.07 an ounce. Platinum off $9.55 at $8.45 an ounce. Copper down 4 pennies at $2.01 a pound. Light sweet crude flat, $41.89 a barrel. Bonds, the 10-year up 3 ticks, 126.25. 30 up 16, 154.30. Bottom line, the 10 and the 30, folks. Bond continue to reject lower price, have lighter volume. They went topside once again. It looks like there's small ABC structures on the way up. That would be higher price, lower yield, which would equal lower price in the S&P. King dollar up 216 ticks, 99.84. The euro is down 17 at 106, and the yen is trading at 122.89. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so if we start with the SPY, we got a little divergence out here, and this is what it is. So we start with the SPY. Now, the SPY on Friday, folks, failed on price and volume. And the failure that we're talking about is getting over the November 9th high. You got over it, closed underneath it on the daily, weekly. That's a failure. Today, what we did is that you pull back 63 million shares. Now, the SPY didn't make a higher high, so that's a pullback on lighter volume. You know, we'll see whether we get more volume as we get to lower price, which I expect we will. The Qs, and here's the divergence, the NDX 100, the NASDAQ, as well as the Dow Industrials, did get to a higher high, did have lighter volume, and did fail on price. So that's harmony. That's harmony. You know, the Qs got to 114.95 today. The high of the November 9th high is 114.51. We've closed at 114.15. You've done 20 million shares. Friday, we did 22 million shares. Thursday, we did 26. Wednesday, we did 32. You can see what's happening. There's no buyers up here. It's rolling over without buyers. Gold contract. What do we have with the gold contract? Bottom line, gold contract also needs buyers. Gold out here, we're trading at 1067.50. That's at the bottom of the range. Bottom line, we came down into the 1065 area today. Now, you had lighter volume than we had hitting those lows generated last week. We hit a low of 1064, that 181 million. Still too much volume, though. That's the bottom line, folks. You did 164. That's yeah. So, hey, we'll see how the 1064 to 1062 holds. I expect that's going to get tested once again, probably tomorrow or the next day. The XAU and the HUI, they did hold their lows. You know, so those are the equities, the gold and silver equities. They held their lows on the daily, on the weekly last week. That's a positive indication that they do want to go higher. The metal itself is the problem child. Now, let's go over, we're going to go back to bonds in a second, but what I want to do is that we're going to go over the dollar, because the dollar is all about metals, all about commodities in general. So, what the dollar did out here today is this. The dollar got over the highs of the 18th. That high that we're talking about is 99.96. The dollar made it to a dollar today in the index, 100.06. That's what we made it to. We did 28,000 contracts. The last high at 32,000. So watch how these highs came in. The first high, which was finishing up the ABC structure, 99.47. That was 12 days ago. That had nice volume, 49,000 contracts. We make a higher high with 23,000, but then you come off it. Here's what you want to learn out of this. It's how you come off them after you've made the price projection. So the price projection was made, you come off them with volume. We come off them first with 44,000, then we made a higher high with 32. You come off that again with 39. How we come off this high, folks, is absolutely crucial. The reason that it's crucial is that it's going to release a huge amount of information to the marketplace, whether you're in the metals market or not, because this is why. The currencies rule the world, number one. In the case of the dollar had started out at 121 in 2001. The dollar breaks down. It traded up there, by the way, for 2 years. That's distribution at highs, 2 years. When it broke down, it went from 120 in January of 2002, straight down, 2 years to 80. Didn't even breathe, man. I mean, a couple sideways moves. But bottom line, monster move down. Did a counter trend bounce up to 90, then drove into the low, which was the low of the financial crisis in 2008 at 70.80. Now, from 70.80, it's been building cause and has been getting up to higher price. This level that we're at right now, this is why we're going to spend some time on it, this is crucial. The 100.38 area, if we take that out with volume, it's a huge ABC up. It'd end up being about 112. So this level is crucial. You know, you're either going to just back down off this level, not enough strength at this time, you back down, that would set up a 92. It doesn't have to set lower than 92, but bottom line, it sets up a 92. That would give the commodity markets room to breathe. We'll see about the equity markets. That's one scenario. That would be a scenario that backs down. A scenario that doesn't back down and you go up to this 112, that would be a heavy scene, man. It would be a heavy scene in the context of where the metals would go. I'd expect gold would go lower there, silver would go lower, all commodities would go lower. The stock market would probably get slammed beyond belief, because what you still have is the aspect of how many of our large companies make money overseas. And in that aspect, the currency valuations would be intense. And just to give you an idea of the difference in the valuation, if you go to the Canadian dollar, from last year to this year, you're talking, you know, we'll put this up for a second, but you're talking, if you were making reservations and coming to the United States last year, your dollar was worth $1.13. This year it's $1.33. It's an inverse correlation, and I'll do that for you. It's like 91 cents to 71 cents, folks. It's a big inversion. Stay right there, folks. We're coming right back.